Another weekly update of rental house versus high income ETFs. This is episode 7.0. So each month I start a new number, like 7. Next week will be 7.1, week after 7.2. Then 1st of June will be 8 point whatever. So if you're wondering what that means, that's what that means. So for those of you that have not seen this before, we had rental property. One of the last properties we sold, we took the money, invested it into some covered call ETFs, and I'm keeping track of how that's performing compared to how things would have went if we would have kept the house. So the house actually is there on the screen. That's what it looked like, a little 3-bedroom, 1-bath house. If you are new to this, or if you're old to this and haven't subscribed, I would appreciate that. I'm trying to make this worth my while. So do me a favor and click the subscribe and all types of buttons. Okay, so we had a pretty good week, pretty good compared to the month of March and April so far. So we're bouncing back. So I have equity 61,182. That was down as low as 49,000, but it's been as high as 79,000. So we're climbing back about halfway back to where we should be. I'm using margin on this account. I got 64,332 in margin. So what exactly do I have invested? I have 500 shares of GIAX, and they even sent me a free hat for all my trouble. We have 100 shares of SPYI, SPYI. We have 600 shares of AIPI, and we have 2,700 shares of qdte. So when my margin gets down a few more thousand, I'll probably look at buying some more shares of something. And I'm torn between GIAX, SPYI, AIPI. I think SPYI would be the best, safest, not necessarily the best, but the safest investment as far as downside. But I think AIPI would have the most upside in monthly return. And GIAX is in the middle. So if anybody has any suggestions, I would be interested in hearing why you would pick one or the other. qdte, I have plenty. In fact, I wish I would have probably had spread that out over the 4 more evenly at the beginning, but I like that weekly payment to get that margin chipped away at each week rather than monthly. I don't have any regrets, but let me know what you think I should do. So lately I've been posting this chart each week just to get an idea like where things are. You see the line here is a 20-day moving average of the SPY, the S&P 500. And back here, I determined that things might hit a low, and that's when I bought some extra shares of GIAX. But at the same time, I didn't want to get too deep into my margin, so I did buy a little bit extra, but didn't go too overboard because at this point, the RSI was way down, like the relative strength index, which if it gets down too low, like below 45, people say that's oversold and you expect things to turn around a little bit. So that's when I bought some extra shares and then it popped back up. So the average price of this S&P 500 is starting to go back up and it's getting to the top of the Bollinger Band, which kind of means that we might be in for a little bit of a bounce down next week. If it hits that top level, it might bounce back down. It does break out of the Bollinger Band sometimes, like this here on the low, but kind of expect that to level off for a little while. Now, something in the news could change everything, tariff talk or whatever, but traditionally it would probably hitting that, bouncing down a little bit, and then working its way back up. So moving average, just keep going up a little bit. Keep an eye on that, and we'll see how things go. So I said I bought some shares. It's about a month ago. I bought GIAX, about 300 shares. That's when that was about at its low. We got some distributions from GIAX, and then we got a distribution of almost $600 from qdte. If we look at this spreadsheet here, it shows a little bit better exactly what we got. So the GIX was still from April, got 165. And then Friday of this week here, got 589 from qdte. So for the total of the month, we've got 2957. Next month, I'm expecting about maybe close to 4,000 because I think the upward trend in the market is going to make qdte pay a little bit better. Plus, there's 5 Fridays, so I'll get 5 payments for qdte next month. So I think the distributions would be about 4,000 for the month of May. So the beginning of this project, this is what I projected how things would go. I start with 70,000. I projected I start out with 52,000 in margin, and I was expecting to get about 3.5% per month. And then I started out doing this monthly, and then I switched to weekly right about here. So instead of 3.5% per month, I knocked that down to 0.75% per week. And this column shows the total gain. This column is the amount of margin I'm using. So this number is 75% of this number. So we're down here about May 2nd. I was expecting to be at 85,000 and this much in margin, this much total, and expecting to be up 22% total. The reality is I'm up 61000. The only thing that's close is the margin, 64,000. And total invested is 125. And I'm using 105% margin when compared to my equity. So 64,000 is 105% of 61,000. And remember, I want to get that about 75%. So I probably will keep the margin pretty much close to what I was estimating the margin would be over here, just so I can keep invested in the market a little more to try to keep those returns up. So this is all about comparing the returns of the ETFs to the house. I added the month of May to this. So each month I collect $700. I pay $80 for insurance, $200 for taxes each month. And the cash balance I would have had since last November would be about $2,900. Equity, I'm expecting equity to grow $233 per month, which is 4% per year. And so the cash and the equity would be about $74,571. At the end of the year is calculate what my expenses had been for the past couple of years, average those together, and just toss in like a yearly total expenses rather than tossing in random stuff each month. And so how things going so far. So house 74,571, ETF 61,182. So the house is up 13,389. So in other words, if I had both and I liquidated both, these are the numbers I would get. Obviously, I would have closing costs and realtor fees if I used a realtor and all types of things for the rental house. So in reality, that would be probably about 8 to 10% of the total cost. So maybe 68,000 is what I would clear if I sold that house compared to the ETF. So some people have said, I bet you wish you would have kept that house. No, not really. I sleep a lot better at night, even with the ETFs going down, than what I do having a rental house, having tenants tearing it up, ripping it apart, not paying rent. That makes you lose sleep at night. So that's the weekly update. Tune in next week to see what's going on. And remember, if you haven't subscribed to the channel, I'd appreciate that. Talk to you next week.